In this video, I'm going to show you how I use two very different stocks, to generate some weekly cash printing machine paychecks that you can do. If you just stick around, watch the video, I know you're going to like this one.
Let me show you my eyes.
Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, if you weren't watching, Friday was an absolutely exciting day if you own Roku. And guess what? I own Roku. So we had some very exciting trades. We're going to talk about them right here, but I'm also going to show you another trade. It's a weekly trade. I'm going to talk about it. In fact, this video is going to be about a weekly covered call and a daily cash secured put. Yes, a daily. I call it my juice. We did a little swing trade on a cash secured put on Roku. I'm going to explain it right here. I tell you what, man, generating that weekly income makes me feel good because, man, when you're able to collect 100, 200, 300 in these little crumb trades, man, I feel like I'm generating real weekly paychecks. Now, we're going to talk about this. I hope it excites you. I hope it motivates you to get in the game. See, that's the important thing here. I do these videos. I show you my trades. We talk about them, so maybe you learn something to motivate you. Because so many times people tell me that I have motivated and inspired them to get in the stock market and to enjoy the success of what selling premium can do for them. It has changed my financial life. All you have to do is look at my numbers right there. I have gone from a loser swing trader, day trader to now selling premium and having success. Man, I showed you in my year in review video, I think last year I had one bad trade. And for me, 3 years ago, man, that is a miracle because I was losing trade after trade after trade. Look, I was always trying to hit the home run, right? I was always looking for those penny stock trading videos on YouTube, right? I was trying to take that couple $100 and make it a couple $1,000. I'd rather hit singles and doubles and do it consistently and learn a skill so I can use that skill in retirement. Hell, maybe I need to pay some bills. Maybe I just want to live the good life. See, that's what we talk about here. I show you the trades because I'm from the old school. You show me once, you show me twice. I absorb it more than, say, reading a book. It's just how I do it, and I know for a lot of you, you like it and you tell me about it, which motivates me to come back to do the next Red Hot Cover Call video. So look, let's go ahead and get to this. If you've never been to my channel and you like what you're hearing, subscribe to the channel. Man, that's the only way you're gonna know if I did another video. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. My numbers speak for themselves. And look at this. 2020 is already jumping off the charts. Man, I have so many trades working right now. Love it. Let's go ahead and get to those two trades. I know you're gonna like them. Now, if you haven't checked out what the upgraded CTP dashboard is all about, I want you to go to my page, CTP dashboard, click on upgraded CTP dashboard, see if there's anything there that you think will up your game. What I'll tell you is this, recently my charts of the week have absolutely been knocking it down. In fact, my most recent chart with Home Depot, unbelievable buying opportunity. Hey, look, I don't make predictions, I don't make recommendations, but when you look at the charts and then you act on that, right, you have your financial education, you've done your homework, the charts are telling you a story, and then you act on it, man, it's a great opportunity to have success. So if any of that interests you, just go over to the website, check out the upgraded CTP dashboard. Now we're going to highlight these two trades down here at the bottom. You see the ADV trade, and you see the Roku trade where I sold a 129 cash secured put. Okay, the other Roku trade, the 144, that was a 30-day trade. We talked about it, I think, in my last video. And that trade, I'll tell you, I could do an entire video on that. In fact, I think I will, because it gave me a chance to utilize exit strategies. And I'll tell you, had I not utilized an exit strategy, I'd have been assigned those shares. And Roku not only fell, man, it fell some 14 points lower. Use an exit strategy, was still able to pocket some $700. You have to have exit strategies. You have to manage your trades. We'll talk about that in another video because that was very exciting. But we're going to talk about that ADV trade and that 129 Roku cash secured put. And the ADV trade is a weekly trade. The Roku trade is playing that juice just a mere couple hours before the market closed. So I know you're asking yourself, come on, John, talk to me about the weekly paycheck. Show me something. I want to learn this strategy. First of all, you need to know what the covered call is, the Cash Secured Put is. So I'm going to suggest that you go back to my YouTube channel. In the search bar, type weekly income, weekly covered call, right? I want you to go to YouTube and type in weekly covered call trades. You need to get your financial education. You need to understand what a covered call is. Now, it's not rocket science. Once you learn it, whether you're doing a weekly or a monthly, 3 months, or even longer, you'll understand it and you'll be able to do it. And you'll be able to profit from it once you learn the golden rules of covered call writing. Now, what we're going to talk about is the weekly covered call. So real quick, the idea is this. I own at least 100 shares of this stock. I'm going to go ahead and give somebody the right, but not the obligation to take them away from me at a price that I pick for a time frame I pick. They're going to pay me a per share premium. That's the basics of a covered call. Now, in this case, the stock is ADV. Now, I bought ADV at $88.90. So I have to have at least 100 shares of ADV to do this trade. Well, I bought 200 shares of ADV, so I'm able to write 2 options contracts. I'm able to do 2 covered calls. Now, it's the same deal whether you have 100 shares in one contract or you have 1,000 shares and you write 10 contracts. The idea is you're getting that per share premium, and once somebody takes you up on that trade, right? That covered call trade that you're going to write, well, they deposit that money into your account. They never get that back. Now, whether your shares are taken away at expiration or not, you keep that premium. Now, the idea here is we want to do this where we're able to make 3% a month. In the case of the weekly covered call, we're not going to make 3%. We're only going to look to make that little crumb, a couple $100, or 1%. I love making 1% because, man, if I can do the weekly covered call 25, maybe 30 times a year, that's 30% cash on cash. I'm killing the stock market. Now, with that said, I'm on record. Ain't no way I could ever do 52 weekly covered calls. Now, I have a basket of stocks I go to. And I could intermix 1 week here, 1 week there, do one here, do one there. It's not going to line up perfectly. I noticed when I did this a couple years ago with Microsoft, I was only able to do about 20 of them because you're doing other things, right? You're doing a 30-day covered call with this stock, a 45-day covered call with that stock. Sometimes you just can't do a weekly every single week. But in this case, ADV sets up perfect for me to do a weekly covered call. Now, I bought ADV way back here. This is a weekly chart because I want to show you how this trade played out. But I bought ADV way back here before its X date, its X dividend date. I bought ADV at $88.90 a share, and I wanted to collect the juicy $1.10 dividend. I wanted to write a 30-day covered call so I can use the covered call and the dividend capture. Love that strategy where I'm able to juice my returns by not only collecting that covered call premium, but that dividend as well. Well, in the case of ADV, the shares fell. Wasn't able to write that covered call. So here I am holding the shares longer than I wanted. And of course, the stock fell to some $81. So now I'm really stuck because ADV's premiums, right? That premium we get paid when we give somebody the right to take our shares from us, they weren't big enough to then cover my cost of the stock purchase, right? Think about it. If the stock's trading at 81, I write a 30-day covered call and I get $1.50. Well, I'm only going to collect $82.50 and I'm in the hole $88.90. So a part of this strategy is managing your trades, but sometimes you can't make trades. So I'm holding ADV for a bit. Now ADV gets some wind under its sails. They had some great earnings, and the stock they're merging with, Allergan, had some great earnings. ADV rockets to some $95, $96. Now, I've owned ADV for about a month, and I'm thinking, okay, I'm going to go ahead and let my shares be taken away. This was a great trade, but I'm ready to move on from ADV. I think the stock has rallied a little too much, and it's going to sell off. So I'm going to use that opportunity to write this covered call, and if the stock were to fall, by the way, this is my hunch, if the stock were to fall, I collect that weekly premium, and I might not have my shares taken away. So here's the trade. As ADV is moving higher to some $96, $97. Remember, I'm in at $88.90, and I collected that fat dividend of $1.10. So my true cost basis on the shares, less than $88.90. With ADV trading at $96.97, I'm looking at that 1 week covered call. I want to have my shares taken away right here. And I want to make all that profit. So what I do is this. The idea was ADV had rallied a bit too high, right? I mean, when you're trading at 81 just 2 weeks earlier and it rallies back to 96, 97, there's going to be some profit takers. I'm going to play that idea with this short-term covered call. So what I did was this. When the stock was trading at 95.95, I went ahead and wrote the 1 week covered call, okay? I gave somebody the right, but not the obligation to take my shares at 95, right? They gave me $1.50 for this with an expiration of literally 4 days. 4 days, okay? So this is going to be a very tight trade. Chances are, because this is an in-the-money covered call, okay? You see how it's in the money? The stock's trading at 95.95. I'm giving somebody the right to take my shares away from me at 95. And they paid me $1.50. So we're going to talk about that $1.50 here in a minute, but do you see how chances are they're going to take my shares? I better not want ADV to go any higher, or I better be good with the idea that I'm only getting $95 for my shares. And of course I was, because I'm getting $1.50 for the premium. So really, if my shares are taken away, somebody's actually paying me $96.50, which isn't too bad when I bought it for $88.90, plus I got the $1.10 dividend. So that's what I did. I placed that trade and ADV starts to move higher. Now I figure my shares are going to be taken away, so why even watch this trade, right? Well, remember what I said earlier. I actually thought ADV had gotten higher, overextended. Wall Street's going to take some profit. So I think it's going to peel back. And sure enough, ADV starts to peel back. And you could see it right here. And as it gets further and further down, right, there's a likelihood that it will finish Friday below 95. Now remember, I gave somebody the right, but not the obligation, to buy my ADV shares at 95. If it trades below 95, why would anybody buy my shares at 95 when they can go to the open market and buy them cheaper? So on expiration, if ADV finishes below 95, I keep my shares, I keep the premium, and we move on. Now, I wanted to give my shares away at 95. Yes, and I was okay with that. But remember, if my shares are not taken away, you know what I do. I pocket that 150. I keep my ADV shares. We look to do it again. Look, when I place a trade like this, man, if I get stuck holding the shares, we're going to go ahead, have a plan, we move on, but we bag that $1.50 profit. Now, as ADV is finishing the week, I'm thinking to myself, this thing is probably going to stay above 95. And I'm going to have to make a decision. Do I want my shares taken away? Earlier in the week, I said, well, it doesn't bother me. But now as we're getting close to the end of the week, I'm thinking to myself, well, maybe I want to keep it. It hasn't fallen off like I really thought, and maybe Wall Street will run it back up. Well, on Friday, we wake up and the stock's trading below 95. And now this option that I got paid $1.50 is trading for like 50 cents, right? We're running out of time value, and because the stock is at about 95, there's really no money in this option. It's only going to be time value. And as it really dips off, well, of course, time decay is really eroding the option price. So as we get closer and closer to the end of the trading day, this option that I got paid $1.50 is trading for 22 cents, 15 cents, 10 cents, because the likelihood of it closing above 50, very unlikely. So the time decay and the option price is getting closer to zero. See, this is the real risk of buying options. See, I'm the seller, and this is the premium I collected for giving them the right to buy my shares. That person on the other side, they bought my option, and they have a deadline. If the stock does not trade at 95 or above, this option goes to zero. So when you hear all these fake gurus and all the advertisements that lead into all these videos that we do, they're talking about buying options, buying options, buying options. You need to understand the risk, because if you don't understand the risk that this $1.50 goes to zero, if this stock does not finish above 95, you're in trouble. Now, the way this worked out is this. ADV traded down, and I wanted to keep my shares. Yeah, I changed my mind, so I put in a limit order of 10 cents. I gave away 10 cents that I didn't have to, but I wanted the trade gone, and I can move on with the rest of my day. So ADV was trading below 95. This option that I got paid $1.50 for was trading around 10 cents. I put in a limit order, so when it hit 10 cents, they would execute the trade. They close the option. They close the covered call. I then keep my shares. This turns out to be about a $500 premium profit in about 4 days. Now I'm going to go ahead and let the stock settle. Hopefully it doesn't fall much further, and I'm going to look to write another, possibly 30-day covered call. And if my shares are taken away, then it's a nice profit with this ADV trade. Now we're going to talk about that Roku Cash Secured Put. This wasn't a weekly, this was a daily. In fact, while I was on lunch, I did this trade, literally with 3 hours left in the trading day. Now let me give you a little backstory on this Roku trade. Roku announces earnings right here, and earnings were perceived good. This thing spikes to some 152 in aftermarket. And when it opens up, man, everybody is singing the praises of Roku. And even I am. I have a Cash Secured Put, a 144 30-day Cash Secured Put, for which I did last month, where I collected $11.62 in premium. I'm already counting my money. Now, what happens next surprises me, and I don't make that full $11.62 on that 144 Cash Secured Put. We're going to save that for another video because that was exciting. We're going to talk about this very tight 3 and 4 hour trade where I used volatility to generate some Cash Secured Put profits. And the idea here is we're going to up the cash, right? We're going to say to the greater stock market, we will buy your shares at a price we pick. And we're also going to pick the time frame. You're going to pay us a per share premium for me putting the money up, right? If I'm going to put my money up, you're going to have to pay me for doing that. People will do that to have insurance. They, for whatever reason, usually brokerages or hedge funds, they can't lose X on a stock. Does not matter what they pay for the Cash Secured Put premium. They just cannot lose more than a certain price. So when Roku was trading at 130, right? This thing had fallen some $9. Hell, it was even falling some 10 and 11 bucks. It sort of settled at 130. And I'm looking at this trade down here with only 3 hours left in the trading day. Now, I'm going to tell you this, okay? This is a juice trade for me. I'm not advocating you go out, do 3-4 hour swing trade, day trades on options. I'm not advocating that. I'm showing you my trade. We talk about them, so maybe you learn something. And what you may learn is how the Cash Secured Put works. And what you may learn is John can get himself in some crazy situations sometimes as well. So with Roku trading at 130, man, the stock is getting pounded. I see it basing. Do you see it basing right there? And I'm thinking to myself, what kind of premiums do a 3 and 4 hour trade pay here? When I looked at a 129 3 hour trade, right? The expiration is this Friday, the same day. This 129 Cash Secured Put paid $2. And I'll tell you what, I'm thinking to myself, I think Roku does not finish at 129. And I'm going to go ahead and collect this quick crumb, use the volatility, but here's the real nugget. Here's the real nugget of information. Remember I told you that I had a 144 Cash Secured Put on Roku that expired? See, a month ago, I was willing to own Roku at 144. And in fact, I bought Roku shares at 144. So I'm okay with where Roku's at, even though the thing's tanking some 9 and 10 points. So when I close that 144 Cash Secured Put, I'm thinking to myself, I'd like to buy some shares right now. And I also said to myself, man, I'm willing to own Roku at 144, then I'm really ready to own it at 130. Well, I'm going to play this little juice trade here, and I'm going to write a 129 Cash Secured Put. I'm going to get paid $2 for this and see how the trade plays out. And if I get stuck owning Roku at 129, well, hell, I was going to own them at 144. Think about that for a second. That is a serious discount to what I was ready to pay a month ago. So I went ahead and placed that trade, and as you can see, Roku danced at 130 the rest of the day. It expired worthless. It did not finish below 129. So this person that bought this Cash Secured Put for me for $2, remember, they had the right to stick me their shares at 129. Well, they're not going to stick me their shares at 129 if the stock's trading at 130, because they could sell their shares on the greater stock market higher. So what happens here is if it does not trade at 129 or lower, this trade expires worthless. I get my money back and I keep all of the premium. That's how a Cash Secured Put works, and that's how this trade ended. Now I'm going to tease you for the next video. What I also did on Friday was I wrote a nice cash secured put, at the money cash secured put, man. I got paid $11.50 for an at the money cash secured put. Now I want to talk about that trade because I used a limit order and there was a little bit of drama. I'll talk about that trade and the cash secured put I bought back yesterday. I'll tell you, using the cash secured put, I'm finding more and more people out there using cash secured puts to generate more premium than the covered call. Now, I love the covered call and I love the cash secured put. You really need to learn this. Now, you don't have to be as aggressive as me using this super uber aggressive stocks like Roku. I show you in my videos all the time where I use great stocks like Bristol Myers, Chevron, right? 3M. We can use great S&P type companies to generate that steady Eddie income in retirement. I love showing you these trades because, like I told you in the past, man, I need my juice. I still have that swing trade mentality, even though I like the more conservative, less risky selling premium strategy. Hey, look, that's what you're going to get with me, man. You're going to get me showing you my videos of some very conservative trades, some ideas, and some super wacky trades like this. That's why I want you to come back every single week, because I want to motivate you and inspire you, and hell, if anything, entertain you. Because I know there's some videos out there, man, that put you to sleep. Well, I'm going to leave it right there for this week's video. I hope you pulled something from it that ups your game. See, that's what I try to do here. I show you my trades, we talk about them, so maybe you learn something. It's about getting comfortable with something, then we can go out and do it. Because when we do it and we get that experience, man, that's when you feel it and then you own it. And I'll tell you what, it will change your financial life. Look, I'll tell you what, it's all about having success, because I know if I do 1 trade, 2 trades, 3 successful trades, man, I'm going to want to do another. And then we're in the markets and we have opportunity. For all of you that are sitting on the bench watching others have success in this raging bull market, I'm going to encourage you to get off the bench. Open up that small ball account and do your very first small trade. And remember, we can do a safe trade if we follow those golden rules of covered call writing. Look, use me as motivation. 3.5 years ago, I was a guy that never did a covered call and was worried. I was apprehensive, didn't want to make a mistake. But once I did it, it changed my financial future for life. Hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Ring the bell so you get the email notification the very next time I do a red hot covered call video. And until next time, may all your covered calls be profitable.